The Orange County housing market continues to slow down due to much higher interest rates. Despite the slowdown, we're still in a very hot seller's market where homes that are priced correctly and marketed properly are still selling quickly with multiple offers and in some cases selling well above the asking price. We just listed a home for sale earlier this month, and as a result of the massive amount of marketing we do, we had about 40 groups to our first weekend of open houses. We had some additional agent showings on top of that, and we ended up with 6 offers after only 5 days on the market. On the other hand, homes that come on the market priced too high and are not being marketed properly are starting to sit longer and longer, and in some cases they're requiring large price reductions in order to sell. I'm Tim Hamilton with StellarQuest Real Estate, and this is our June market update for Orange County. And in this video, we're going to be talking about why the housing market is continuing to slow down. If you enjoy watching this video, I would really appreciate it if you hit the like button below. And please subscribe if you like to stay up to date on the housing market. We upload a lot of videos about different market updates, and we cover market forecasts from a variety of different sources. The primary reason the Orange County housing market, and really the national housing market as a whole, continues to slow down is because we have much higher interest rates than we did a year ago, and the rates have been rapidly rising so far this year. According to Freddie Mac's primary mortgage market survey that was released on June 16th, they're quoting an average of 5.78% on a 30-year fixed rate mortgage, which is up about half a percentage point from the previous week. And if you look on Mortgage News Daily, the week that ended on June 17th, they were quoting just over 6%, which was again about a half percentage point higher than what they were quoting the week before. And so this large jump in interest rates came on the back of the unexpectedly high CPI numbers that were released a few weeks ago. And the Federal Reserve actually decided to raise interest rates on their federal funds rate by 0.75% as a result of those higher than expected CPI numbers. Now, mortgage rates don't follow exactly with what the Federal Reserve is doing on the federal funds rate, but what the Fed does ultimately does impact mortgage rates and interest rates as a whole. So, as interest rates rise, this makes purchasing a home much more expensive for home buyers, and as a result, that tends to be a negative factor on home buyer demand. Now let's take a look at buyer demand in Orange County, and we're going to be comparing 2022, which is the orange line on this graph, to 2021, which is the red line. And you can see that buyer demand today is much lower than it was at the same time last year. And the way Stephen Thomas measures buyer demand in the Orange County Housing Report is he looks at the prior 30 days of pending sales. And so today, buyer demand is about 1,000 pending sales less than it was at the same time last year. Now, the primary difference between last year and this year is the much higher interest rates. Throughout 2021, interest rates ran somewhere around 3%, which was historically very close to being a record low interest rate. Now today, rates have risen to about 5.75 to 6%, so they've nearly doubled in only a year. Now, essentially buyers are faced with a choice if they still want to purchase a home. Compared to last year, they can either purchase the same priced home for a much higher monthly mortgage payment, or if they want to keep their monthly mortgage payment the same as last year, they would be forced to purchase a much less expensive home. In some cases, buyers may not qualify to purchase a home at all anymore due to these much higher mortgage rates. So you can really see that this is showing up in the buyer demand numbers as we have less buyers able to qualify to purchase a home. And in some cases, buyers may be taking a step back from the housing market due to the fact that it is much more expensive to purchase a home today than it was last year with the much lower interest rates. Now we're looking at a graph of the total number of homes for sale in Orange County, which is also referred to as inventory or supply. And again, looking at the orange line for 2022, you can see we had an all-time record low number of homes for sale at the start of the year, which was growing very slowly at first, and then over the past few months, you can see it started growing at a much faster pace. Now, if this trend continues, we're going to have a lot more homes for sale at the end of the year compared to where we started. Now, assuming that to be true, if you're a seller, you're going to have more competition the longer you wait to list your home for sale. Now, that means it's going to be increasingly important to price your home correctly from the start and be working with a real estate professional that's going to provide you with the best marketing that makes your home stand out among the competition. So if you're curious what your home might sell for, feel free to contact me and I'm happy to provide you with a free home valuation report. Now for buyers, this means the longer the year goes on, the more options you're going to have to choose from. With more homes for sale and less buyer demand, we have seen a significant shift in the Orange County housing market over the past few months. One of the ways we measure the speed of the market is by looking at the expected market time, which is the average number of days it takes a home to sell after being listed for sale. We started the year in an extremely hot seller's market where the expected market time was hovering right around 20 days, and it stayed at that level until about the end of March. But from the end of March to today, we've seen it rise from about 20 days to 45 days. So that means homes on average are taking a little bit over twice as long to sell as they were just a few months ago. So as that expected market time rises, that means the market is moving more towards being in favor of buyers. Now, where we sit today at 45 days is still considered a seller's market. Anything below 60 days is a seller's market. Between 60 and 90 is a slight seller's market, and between 90 and 120 is a balanced market. So you can see that we are moving back towards balance, but we're currently still sitting in a seller's market. So, as I mentioned before, homes that are priced correctly and marketed properly are still selling very quickly with multiple offers and in some cases still above the asking price. If you're thinking about buying or selling a home, please feel free to call or text me at 714-486-4086. I'm more than happy to answer any of your questions and help you determine if this is the right time for you to make a move. That wraps up our June monthly market update for Orange County. If you enjoyed this video, I would really appreciate it if you hit the like button below, and please subscribe if you like to stay up to date on the housing market.